Good morning. This is Bloomberg Markets Today. I'm Guy Johnson. Today, alongside Kriti Gupta and Tom McKenzie. Cash trade about an hour away. So what do you need to know this morning? The last few hours have seen some wild swings in dollar yen. After touching 160 for the first time since 1990, the yen has staged a dramatic rebound. Was that the intervention we've been waiting for? It's a big week for markets, with the Fed meeting dominating, but Novo Nordisk, Lilly, Amazon, Apple, Volkswagen, all reporting numbers this week. We're going to be joined by the heads of European equity strategy from Barclays and Bank of America. And Spain will find out this morning if Prime Minister Pedro Sánchez plans to quit following an investigation into his wife. We will be in Madrid with the latest on that story, Kriti.
In the meantime, a quick check on these markets. Green on the screen when you're looking at the futures trade. Euro Stoxx 50 futures higher by about 0.5%. But again, it is all about dollar yen. That seems to be the focus this morning. We're at a 156 handle, down about 1% on the day. But again, keep an eye on those currency pairs. Euro dollar seeing some strength this morning, 107.25. And copper sticking above that 10,000 level. We're diving into all of it. Markets Today starts right now.
Monday, the 29th of April. Good morning, folks. We have a busy morning. We've got a busy week in prospect as well. But let's start with today. The action over the last few hours, extraordinary, Tom. Good morning. You were on air when this was all happening.
Yeah.
Did that feel like intervention?
Well, our MLive team have set this up and said, look, these are the kind of moves, these are the kind of wild swings we haven't seen since 2022. Look, they're on a holiday. The chief currency minister came out and said no comment. But we came in this morning, tumbled through 160, then the strength of 1.6, 1.7%. Jamie Foley, interestingly, saying for things to turn around really for this currency, you're going to need strengthening the economy in Japan, softening the growth picture in the US, softening of inflation in the US, and of course a repricing back to cuts for the Federal Reserve. All those things need to come together, according to Jamie Foley.
Well, it's not turning into just a dollar-yen story now. You're seeing technical levels being broken in euro-yen and then the Chinese renminbi as well, coming up against the yen. Swissy yen is a really interesting pair, given that they're kind of both the denominators, basically, of that carry trade. It's fascinating to see what the ripple effects is going to be as opposed to just dollar-yen.
Do they have to keep going as well? Is this just a one and done, or is this something that the Japanese are going to have to keep going at if they want to keep the currency somewhere around 155? Tom mentioning the MLive team, they've been doing some great work this morning. Let's get Mark Cranfield's take on all of this. Mark, we're trying to figure it out. Was it? Wasn't it? Was that intervention?
There was a lot of talk that around midday Singapore time that the kind of moves that we saw were intervention. It's unconfirmed, as you were just saying. The Ministry of Finance Chief, Mr. Kanda, had no comment for now, which sounds suspiciously like he has more to say on the subject later on, which is not unusual. Japanese authorities don't typically confirm immediately. Sometimes they even wait 1 or 2 days beforehand. What we mustn't forget is that in 2022, when they eventually were successful with their intervention, that was actually the third round of there'd already been a couple of rounds which hadn't gone very far. The third one was the winner. So if this is round one, we suspect that there will be more to come. This won't be enough. But it has been an extraordinary day. We had a brief flip up above 160, which some people found very hard to explain. It quite likely has something to do with algo-driven systems. Then when dollar yen was slightly lower, still above 159, then suddenly it plunged. And that looked suspiciously as though some authority was pushing very hard. And that's when traders started talking that there probably either had been rate checking or actual intervention by the Japanese authorities. Still yet unconfirmed. And once the momentum started to build, we saw even more selling going on. It's no wonder, really, because if you look at the run-up that dollar yen has had over the past few weeks, obviously some traders will be sitting on some pretty healthy profits, and they wouldn't want to miss the chance to cash out. So if they get a sense that this is the turning point, whether it's because it reached 160 and some people are saying, well, that's enough, I'm very happy to settle for that, or because a combination of actual intervention as well, all of those put together, it's quite possible that at least before the FOMC, we've seen a high for dollar yen this week.
Mark, great stuff. Thanks for all the coverage this morning. We've really enjoyed kind of reading what you guys have been thinking as this situation has unfolded on this holiday in Japan. Mark Cranfield joining us from our MLive team. So what do you do now? You're a trader. You're sitting there. You're watching what is happening. You've still got the FOMC kind of coming Wednesday. You've still got this potential hawkish pivot from the Fed. Do you carry on selling the yen? So you've had this move. Do do you now have another go at it? Are the Japanese authorities going to have to come back again and again and again?
Plus Jobs Day on Friday, so like 2 days right after the Federal Reserve. It kind of feels clear that Japanese weakness continues to be the story. No surprise about it. To me, it's the cash reserves that matter more. How long can you keep this up? If this is indeed intervention, you can do it once. Maybe you can do it twice. How long? And I think that's really the issue here. When I think the BOJ and by extension the Ministry of Finance as well, they're running out of both time and money, even when the economics don't really support it.
And this is clearly not the position they expected to be in when the Bank of Japan raised interest rates. Really strange. And the expectation, of course, when they raised rates, and the pricing around the Fed was very different at that point. And then you get the dovish commentary from Raedler on Friday. Why there wasn't more of a pushback in terms of the framing from him. The Bank of Japan would say, look, that's not our realm. But the dynamics have shifted so radically and so quickly in terms of the views on this currency and where the BOJ finds itself.
The Japanese are passengers here, though, aren't they?
Yeah.
This is all about the Fed. This is all about what ultimately happens with the dollar rather than the yen. They can tweak, they can do a little kind of small course correction every once in a while, but ultimately the direction of travel is still against them. And I think that's going to be the really tough thing. To Crudy's point, like, how long can they keep going at this? Mark was mentioning the fact they had to do it 3 times last time before they got a big effect. They get a big effect this morning. But we now know kind of 155 feels like a line for them. The market's going to take that and run with that and keep it going.
Are we underestimating the upside for Japan's economy in terms of its exporters with a yen that got to 160? I mean, in terms of
maybe
it's not causing inflation yet, but it's a benefit in terms of their exporters. And there's a story around China saying, hang on, hold my beer. We may be thinking about our own intervention. Not from Chinese officials, but there's speculation that China itself could intervene to weaken the yuan.
And that's why there's so many interesting pieces of, as well, that trade-off that you see between the Chinese yuan, the Japanese yen, the Korean won as well. At a time, by the way, then imports, by the way, from all 3 countries into the States, which is going to be your primary driver, have actually dropped when you look at the economic data. So I'm curious how much of that currency play is still even relevant at a time when people kind of have that trade-off. Damian Sassower in the States does a lot of good work on that.
This is Monday, so we're kind of... We're a few hours into Monday, and we're already seeing significant volatility in FX, which has remained rather muted for a while. The rest of the week, wow, it is quite the week. So later on today, we get inflation data out of Spain. We're going to be watching what's going to be happening out of Germany as well a little bit later on. You got the Fed Wednesday. That's the kind of the macro picture. But look at this week in terms of the corporate earnings as well. It is thick with corporate earnings. And from an equity point of view, which is going to be the ultimate determinant? Is it going to be that corporate earnings story, or is it going to be the top-down macro narrative?
I think I'm going to take the contrarian approach. I think today is actually maybe a little bit more interesting than some of the later in the week. Here's why, though. You're getting some kind of contrary things happening today, right? You get the German data, you get the Spanish data. I'm very excited about the Spain story, by the way. We'll put that on a burner for a second.
It's ahead of your holiday, right?
Yes, I'm personally invested, but also because it isn't very much in the news. Jamie Rush, our chief European economist, often says that Spain's inflation numbers, especially right now as kind of being the outperformer of Europe, can be a leading indicator for the rest of Europe. And I thought that was really interesting. In the last hour, Tom, you actually spoke to Federico Santi over at Eurasia Group, who I think was saying...
Yeah, really interesting. He was kind of outlining the different options for Pedro Sánchez, but he's also suggesting that this is ultimately a domestic political ploy by the Spanish Prime Minister ahead of really important elections in Catalonia and then, of course, the European elections, and basically a bit of a sympathy play by Sánchez. He's not certain. There's a number of different reasons he could be thinking about this, but it could be an attempt to kind of rally the vote. They're behind in the polls. This, of course, is a Prime Minister who's willing to take sometimes, significant political gambles.
But I think this goes to Guy's point. You love to talk about the fiscal spend in Italy and how that's been driving the outperformance. It's a really interesting, similar story of outperformance in Spain as well. And I think if you put the politics aside for a second, the economics of Spain and the corporate story there is pretty fascinating. We're going to dive into that throughout the rest of the show. There's a couple of other corporate, though, catching our eye this morning. A redhead crossing the terminal around Atos, which, by the way, speaking of kind of governments taking stakes in companies, I believe there was a report on Friday that there may be some interest in taking a partial stake by the French government. Atos getting a France offer for strategic operations at about 700 million euros to a 1 billion euro valuation. So, again, the early indications of that out this morning.
This is strategically important for the French government. They need to make this. They need to make sure that this doesn't. That they're concerned that basically you've got a whole load of activists potentially taking stakes in the business. You've got potentially debt holders potentially taking control of the business. They don't want to make. They don't want that to happen.
It's really interesting. This is a cybersecurity business, part of the business. You were talking about the Dark Trace story at the end of last week and the fact that that is going to be taken private by a US PE firm. So you've got the state in France intervening to invest in a key cybersecurity and IT company in France, and you've got the UK apparently standing back and letting one of our key cybersecurity companies be taken private by a private equity firm in the US. That's an interesting dynamic.
I think the difference is the fact that Atos is so heavily plugged in.
Yeah.
To the French military. It does its crypto stuff is important. Not its crypto stuff. Its cyber stuff is important, but also its quantum computing stuff is very important as well for the French military and the French nuclear industry. So I think there are differences in terms of the way that you would perceive these businesses.
Okay.
It would be like Rolls-Royce.
Yeah.
Being taken over, maybe, in terms of the strategic assets.
Maybe don't put them into the same bucket.
But I think the dog trade story is really interesting in terms of the UK potentially losing a key tech stock to the United States. We've also it's a big week, a lot of corporate earnings coming out. I come back to this idea: is the corporate earnings story going to be the driving narrative this week? If you continue to see strong earnings, is that enough to keep the equity market on track at a time when we're backing off rate cuts? That's going to be the balance, and I think the Fed probably will be the ultimate determinant of that.
Liquidity is a big concern, it feels like, when you're talking more and more about kind of what, if you are seeing this kind of weak European growth environment, and a little bit more clarity, by the way, since the last time around that we got these earnings that Europe, that the ECB is looking to cut in June. At least that's the way the market is pricing.
But then
well, that was my question.
Yeah.
It feels like once you open that door, you can't really go back. It seems to be the understanding. But the corporate side of it, I think, is interesting because how are you positioning around that? Are you still responding to the U.S. consumer story? Does the U.S. Fed and the Fed matter more than what's happening with the ECB? And I think that's the clarity I'd like to get with some of our guests later this hour.
We'll figure out the relationship with European corporate earnings as well.
Yeah.
So this week you got Novo Nordisk and Lilly both reporting. So that's the kind of the GLP-1 story that's going to be that's been such a key driver for Europe, particularly with Novo. If Novo continues, does that keep Europe on track? Because the tech stock story is faltering quite significantly. You obviously saw Tesla's numbers last week. Meta's been a struggle. Amazon's going to be an interesting one, I think, to watch out for this week. We've got, AMD, Amazon, and Apple this week. So it's going to be interesting to see how they perform. But if the European economic story is struggling and the US isn't, why own European equities at this point? We're going to be talking we've got the head of Barclays, European equity strategy, and the head of Bank of America coming up. I'm really fascinated to get an answer to that question from them.
Tim Craighead saying earnings per share across Europe expected to contract around 3%. He says that's relatively good, but that compares to EPS growth of 11%. So contraction of 3% in Europe versus growth, to your point, of 11% in the US. Does it just come back to the multiple story and the valuation story?
I think there's a political story into this as well, which is that policy really matters here. And I'm going to bring it back to Spain as well, because windfall taxes matter for banks, for some of the big oil companies as well. There is a very real read-through that I think a lot of people haven't been able to quantify just yet. And I think that's one that I've at least got my eye on.
In the deal-making, look, we were talking, of course, about Darktrace and the takeover by a US PE firm that was announced and came through on Friday that Guy was reporting on. Blackstone coming through, talking of UK companies, Blackstone coming through with a new offer, a fresh offer for Hypnosis, the Songs Fund, surpassing a previous bid from music investment firm Concord. So they're coming through with an offer of $1.30 a share for Hypnosis, of course, a London-listed company. Concord, which is backed by Apollo, last offered $1.25 a share. So Blackstone juicing their offer. We'll see how this is received, of course.
That's a nearly 50% premium to the April 17th close, the undisturbed close. And that maybe speaks to, as well, some of these London valuations and how private equity views them so differently. And again, you come back to Anglo-American, there's talk the BHP is going to come back for another look at that one a little bit later on. So maybe we're going to see some deal flow as well this week.
So much. Apparently this has been something in the works for years in terms of kind of consolidating this bid. And the timing is interesting because so many people looked at that deal and said, is this worth the price that they're willing to pay? I don't really know. So I don't know. Playing a little bit hard to get there. Yeah,
and certainly a story again on those UK markets, as you say, Guy. Coming up, though, we'll go back to the topic that seems to be the top of the list for Criti, which is Spain and what's happening in Madrid. We're going to cross over to Madrid. Spain waiting, of course, to find out whether Pedro Sánchez is going to be stepping down. What he's going to do, he's got a number of different options, of course. He says he's going to make clear his future and his decision later today. Plus, BHP, as Guy mentioned, expected to ramp up, or at least boost its bid for Anglo-American, where the activist investor Elliott just took a stake. Up next, though, it is all about the yen. Still this morning, dramatic moves, and we remain on intervention watch. We're going to discuss that story. If you have any questions for our own guests, send them to us on IB plus TV Go. This is Bloomberg.
sustainable move lower in dollar yen or a sustainable strengthening of the yen can only come from the US side, where we start to see some economic weakness in the US, some more signaling on Fed rate cuts. And I think we're just getting further and further away from that. They either have to be coordinated, with Korea, like we got a statement with Janet Yellen. That could make the move a little bit more sustainable, or it has to come with that turn in the Fed policy.
Saxo's head of FX strategy, Cherry speaking to us Friday, talking about kind of the reality of what the Japanese authorities are dealing with. It ultimately comes down to what happens in the United States, and they're just passengers on this train. Samuel Zeef, head of global FX strategy at JP Morgan Private Bank, joins us on set to carry on the conversation. We've seen some pretty dramatic moves this morning in dollar yen, in the yen crosses. Does it feel like intervention? And if it was intervention, now what? Samuel, good morning.
Good morning. How are you?
It's a busy morning.
A little bit. Good timing here.
Yeah,
yes.
we're still figuring this one out. So was it, wasn't it? Like, it has all the hallmarks, but
absolutely.
Tell me.
Yeah, so we haven't had any confirmation, obviously. The BOJ or the MOF might do so later today. Let's just be honest. It looks like intervention.
Yeah.
Right? Japan's out on a public holiday. They've intervened in public holidays before. Even the size of the move, the volumes traded on electronic trading platforms, everything looks like a day that has had intervention in the past. Even the size, 3 to 4 yen, 2 to 3% on dollar yen. It certainly looks like it.
So now what? As we've just been hearing, this is a game that the Fed is in charge of. We're building up to, obviously, the Fed meeting Wednesday. You've got payrolls Friday. The Japanese feel like they're passengers on this train. So as a market participant, what do you do now? Do you continue to sell the yen and just appreciate that you're going to take days like this and there's going to be some volatility? What's the strategy?
Yeah, I mean, if we take a step back, what is the world that we're looking at today? And global growth, not only in the U.S., but actually outside of the U.S. at the same time, is improving. Right? Data, even in Europe, is looking like it's inflecting higher. In a world like that, you tend to have low volatility, and you want to be short low-yielding defensive currencies. And there's a couple of them out there. Yen, the RMB, the Swiss franc. And so being short those currencies, I think, on a general basis, not only against the dollar, but against more cyclical currencies, is what you want to do. The question is, do you put up with days like this and fund out of yen because it fits that bill, or do you stick to currencies where you're not swimming against the stream, so to speak, like the RMB or the Swiss franc? In the private bank, we've been funding a little more out of Swissy and RMB just because our private bank clients don't tend to like to get woken up in the middle of the night and hear that there's been a 3-4 yen move or 2 to 3% move in a currency overnight. But it is hard to imagine that the yen is really going to strengthen on a sustainable basis unless you get weaker economic data out of the U.S. and globally, or the BOJ shifts policy meaningfully, which we just don't expect in the near term.
So your clients may not do well in a newsroom, it feels like. Talk to us a little bit about whether or not the BOJ, the Ministry of Finance, can actually sustain something like this. If this is indeed intervention, or if another round of intervention actually does come in the future, how much kind of room do they actually have to maneuver in terms of cash reserves?
Yeah. I mean, in terms of FX reserves, they have a decent amount. So it's not like this has to be a one and done. Back in 2022, there were 3 rounds of intervention of decent size each time. I just do think we're big believers in that unilateral intervention, something that's not coordinated with, let's say, other G10 central banks. It tends to inject intraday volatility. It can push against the trend, but it doesn't really reverse the trend driven by fundamentals. Yeah. And even back in 2022, there were 3 rounds of intervention, but it was really only after the 3rd round that happened to coincide with the turn in U.S. inflation lower that you really saw dollar yen decline on a sustainable basis. That's really what you need. You need something to push global yields lower.
So talk to us about levels here then, because we've been on intervention watch since 150, 152, 53, 55, 57, and now 160. How do you kind of get that calculus as someone who's watching from kind of the outside? Where's the line in the sand?
So I don't think there's actually a level or a line in the sand. It tends to be speed and magnitude of the move. And so the MOF themselves have kind of identified a couple quantitative, let's say, tests that we tend to look at internally. It's either a 4 to 5% move over a 2-week period or a 10 yen move over a month. And look, 3-4 sessions ago, we were of the view, intervention isn't really close. You haven't had any moves like that. But after Friday's move, all of a sudden, then you were really close to both of those quantitative thresholds. So it wasn't necessarily surprising that once you hit 160 or went above 160 this morning, well, then all of a sudden you had basically a 10 yen move over a month or a 5% move over 2 weeks. But now the question is, does that reset?
Yep.
And now if we reset back at, let's call it 155, 156, well, now the intervention level necessarily isn't automatically 160 anymore. Right now we'll see where we are 2 weeks' time, and maybe it probably moves higher than that.
What's the dollar's part of this story? Because you're describing it as overvalued, the dollar, and you think it could unwind potentially second half of this year with a number of caveats.
Yes.
So talk to us about what underpins that view.
Yeah. So the dollar, by most metrics, is at least 5 to 10% overvalued, whether you look at the real effective exchange rate or relative to interest rate differential, something like that. The question is, how do you get that to unwind over the medium term? You really need a few things. One, consistently strong global growth. We're starting to get that. Strong risk sentiment in markets. We're starting to get that. And the Fed looking less exceptional, so to speak, relative to other major central banks. And that, it looked like early this year, maybe we were going to get some of that by the second half of this year. And it just doesn't seem like we're going to get that Fed cutting cycle anytime soon. And so we think the dollar is probably going to sustain this, whether we call it overvaluation or strength, for a longer period of time. And that means that even though, sorry, my last point was going to be, you want to be short these low-yielding defensive currencies against more cyclical currencies because you're having a global growth upswing, but you also want to be long dollar at the same time, right?
You mentioned earlier in one of your first answers that you're funding in yuan, because it's interesting. There's a story on the Bloomberg right now quoting a few analysts who are saying, look, it's not base case, but there is a growing risk that China intervenes and that there's depreciation, the kind of moves we saw in the last decade or so, 2015. That kind of risk. You look past that. You don't see them intervening. It would reduce the economy, of course. Some would say they need a 10%, even 20% depreciation of that currency.
Yeah. Look, I mean, I don't think that they want to do anything drastic too quickly, right? If we think back to 2015, it was a quick devaluation that really sparked significant capital outflows. I don't think that local authorities want to, relive any of that. The question to us is simply, one, it's low yielding, so being long dollars against the RMB is a carry trade. And then you can harvest the carry in that trade. The question to me is really if the RMB starts to strengthen over time, or really let's say there's a broader global environment that allows it to strengthen, well, then Chinese authorities kind of ease up on capital controls. Some of the money that's trying to get out of China then starts to remove, and that rally in the RMB starts to become somewhat self-defeating. And so to us, we think it's just an easy place to fund more high-yielding currency trades out of it.
Just very briefly, how sensitive is the pound to British politics at the moment?
Honestly, not very. We do this. We have some internal models where we try and model what the exchange rate, what fair value should be based on rate differentials, global equities, terms of trade, very fundamental factors. When we see big deviations from that fair value, that tends to be something that is driven by politics or, we can think back to years in the past about Brexit, deadline dates. We're not really seeing a big deviation in terms of fair value from where we are trading today. So that's what leads me to say it's not really about politics. It's actually about global growth, monetary policy, and the fundamentals.
We'll keep an eye on the Thursday elections. Great to see you, Samuel.
Good to see you.
See what happens there. Samuel Zief, head of Global FX Strategy, joining us from JP Morgan Private Bank. There's lots of stories we haven't talked about yet. We're going to talk about one of them next. Elon Musk's surprise visit to China appears at this point to be paying off. We're going to have details of that Tesla-Baidu partnership that could be having a significant impact on Tesla's ability to drive through its self-driving technology in China. We're going to talk about that next. Plus, we need to talk about what's happening with Volkswagen, Mercedes. They're all out with numbers this week. We'll dive into the auto sector, one of Europe's best-performing sectors year to date. That's next. This is Bloomberg.
Welcome back to Markets Today. We're about 30 minutes away from the start of today's trade. There's a lot to digest this morning. Of course, the focus is going to be in the currency picture. We're keeping a very sharp eye on the Japanese yen. Dollar yen at 157.21 right now, seeing a lot of volatility overnight, and that's just one part of the picture. Then you've got a slew of I don't want to call them earnings stories, but definitely corporate stories for sure. Well, we have to talk about the car makers. We've got to talk about the Spanish politics and the read through there. We've got to talk about the Federal Reserve and the macro there. Where do you guys want to start?
We can talk about the French as well.
Oh, yes.
You got the Atos story. I think Critty's got this kind of little Spanish bee in her bonnet this morning.
I've noticed that.
I wonder why.
I wonder why. I think the packing has started. The holiday is starting on Monday, this Monday, rather than next Monday.
It's a team. It's really for you guys. I'm going to go to Spain for 2 weeks. I'm going to go do some on-the-ground research. I'm going to spend a lot of my own money to keep up the Spanish economy. I'm doing my part for Europe and our European viewers, and you guys.
Precisely, we're looking for on-the-ground reporting. So if anything major happens in Spain, if the political story kind of really heats up,
Fluent Spanish speaker going to be there on the ground. We'll be giving you those calls, Pretty. Yeah, it's really interesting, Dino, and the options, of course, for the Spanish Prime Minister, what it means. You raised a group saying, look, consequentially for the economy, and you were talking about the relative strength of the Spanish economy, not going to really impact things, even if you do get a change of government in Spain. Of course, the Conservatives are leading in the polls. We're not at that point yet, but he says that in terms of the policy prescription, not a big change there. We're watching, of course, as well, the developments around. You talk about the EV story, the auto story, I should say, the German automakers coming out with their earnings, of course. Unpacking that will be the China side of that story. Tesla, really interesting to see Musk on the ground.
Yeah.
The Chinese... it speaks a number of things.
So the Baidu connection, I think, is really interesting.
Yeah.
My understanding was that the Chinese were increasingly reticent about Tesla's self-driving technology. They're concerned about its sensors, basically.
Yeah.
They've banned... correct me if I'm wrong on this. They banned Tesla cars from certain government kind of compounds because they're worried because they use cameras.
Yeah.
So how does this get them over that? Or is it simply the fact that everybody else is doing it and they're just now going to let Tesla do it?
Well, to your point, it talks to the fact that both the US and China are now scrutinising on national security grounds a lot of these tech companies, and there's the concern there. Baidu does move it forward. They have the partnership. Yep. They're deepening that partnership with Baidu, which is one of the leaders in the autonomous driving space, and it has backing and support from the Chinese government. It's on a list of one of their tech companies that has that kind of support, tech champions in China. So that has that as well. The Wall Street Journal reporting that that Tesla is getting an unofficial nod. They're getting closer to getting that support for self-driving in China. And of course, that's the added revenue stream. So they charge $99 a month or up to $8,000.
But other Chinese car makers are already doing this, aren't they?
Yes, absolutely. So it doesn't decrease the competition at all. It just means there's a potential additional revenue stream in a market where the growth is actually starting to slow for Tesla as that competition becomes more intense.
I wonder where Elon Musk goes next. So he's in China. Does he have to go to Sweden next, potentially? I'm just trying to think about his kind of globe-trotting and potentially where he should be stopping next.
Are you one of those people who, like, tracks his private jet?
There was that Twitter for a while.
Yeah, I know.
that he got very cross about.
Yes, he did.
Others are also seeing this problem as well. I think Taylor Swift, I bring her up, has issues with people tracking her jet.
Don't make me bring this back to Spain.
But I bring up Sweden only because Elon Musk is also locked in a bit of a stalemate with Swedish technicians and the IF Metall union. That's one of Scandinavia's biggest blue-collar labour unions. And it's not going away. I remember when the story kind of broke and there was issues with other unions kind of maybe not allowing the delivery of licence plates, etc. It all got very heated for a while. That heat seems to have come out of this story. But let's figure out kind of where we are, because it hasn't gone away. Ollie Crook is tracking this story for us out of Berlin. Ollie, first of all, where are we? I remember when the story first started getting going, and there was a lot of kind of heat in it. That heat seems to have gone away, but has it?
Yeah, I mean, this is really interesting, Guy. And there's also, you have to get into sort of the customs and the sort of habits of Sweden and all of the sort of labor laws and how it sort of operates, generally speaking. So this has been going on since October 27th, Guy. So we're 5 months into this strike. Remember, that is much longer than we ever saw in anything of the UAW over in the United States. Admittedly, it's much smaller, but it's very shocking for many of the people in Sweden because 90% of companies have collective bargaining agreements with their employees, and Tesla has said, we just refuse to enter into that. And it's not a sort of legal thing, it's a customary thing. And so the consequence has been, as you say, Guy, is there has been solidarity strikes all across the ecosystem within Sweden for Tesla, which means that there were license plates not being delivered. It means that trash was not being collected. And as you say, also that the cars were not being offloaded from the boats to be delivered into Sweden. And Sweden is, you know, a major market for EVs. And what's interesting now is that so then Elon Musk has now sued the Postal Service. He's sued the license plate authority. He's now delivering cars by land. So what would have been really a sort of easy thing to resolve and could have been seen as the price of doing business in Sweden has now gone into a sort of global stalemate where you see Elon Musk standing off with the union, and it might be a lot harder to stand down as a consequence.
Ollie, explain why this is important for Tesla. It's a Swedish market. It's not the Chinese market. Why is this a big deal?
Yeah, so for Tesla, it's only 1% of sales globally. But remember, Sweden is one of the earliest adopters. More than half of the cars sold in Sweden are EVs. That is not, you can't say that about basically any market around the world. And for Tesla, they're still number one. They have about 17% of the market share. Where it is interesting, Tom, is the question of Tesla's labor practices globally. We know in the United States, the UAW has made Tesla a target for unionization. They want to get those companies, unionized. And for Tesla, they see their price of labor as one of their main competitive advantages. They have huge margins as a consequence. Their price of labor per hour is much lower. And by the way, they can axe 10% of their workforce when times get tough, as they just did a couple of weeks ago. So we need to watch it in the United States, but also here in Germany, where they have a big operation in Brandenburg, where they have not yet unionized, but it's something that the union has in their crosshairs.
And I think you were the one who actually brought up the fact that back in the States, Alabama, Mercedes plant Alabama is going to be one of the next ones that's going to be targeted. Bloomberg's Oliver Crook in Berlin. We thank you so much for that crucial context. And, of course, he's, talking about the unionization in Sweden and the United States as well. Let's bring it back to Elon Musk's strategy in China. This comes off that unannounced trip to the country. Well, that may have just paid off. We were just talking about this, what that actually means in terms of partnership with Baidu and what hurdles or maybe lack of hurdles it now means for their driver assistance system there. Bloomberg is told that the U.S. electric car maker will partner with Baidu, as I just said, on some of those functions. Bloomberg's Global Autos editor Craig Trudell joins us this morning. Your initial take on this partnership, what is that? What's the significance here?
It's interesting in the sense that even Tesla is tapping mapping. I think one of the things that Musk has said over the years around self-driving, he said a lot of things that have been looked askance at by other automakers. One is that things like LiDAR sensors or mapping are crutches that Tesla won't have to lean on. It turns out maybe that is for the best in this market. And it does go to show that there's a difference between what he's willing to accept in China and other parts of the world. I think it's also interesting in the sense that it shows an effort on the part of Tesla to work with Chinese companies in order to access a market that it really could use some incremental revenue. And I think one of the things that we really saw with the earnings is that this is a company with a revenue shortfall that it saw its revenue dip to early 2022 levels, and so that is not indicative of a growth company, which has been sort of Tesla's calling card for years now.
And Craig, we were discussing and debating this, the partnership with Baidu, so deepening that partnership. It first struck up in 2020, a company, of course, that was a search engine, a kind of Google equivalent that's moved into autonomous driving. How consequential is that? Does it shelter them from regulatory scrutiny, or at least open the door to this increased access and this software that they need to start implementing across their vehicles?
I think it's essentially the cost of doing business, that if you want to operate a system like this, you must have these sorts of partnerships or work with local companies. And it is interesting that, in the same breath, we do hear, the premier talking about how open China is. And I think there's, of course, a little bit of an asterisk to put on that messaging, in that if you want to access this market, this has been the case for some time where, if you wanted to make cars and sell cars in China, you had to have joint venture arrangements. That was lifted for Tesla, and it was a very notable, move on the part of the government to sort of welcome Tesla in and do things for Tesla that they weren't willing to do with the rest of the industry. Now we've gotten to a point where this is the new way in which car companies are kind of distinguishing from one another, and if that's that important a technology. There's going to need to be, work done with local companies to try and, support them, becoming world leaders.
What does this mean for self-driving in the United States, if anything at all? If Tesla can do it in China, does it make it harder, easier to do it in the United States?
I don't know that it will necessarily have much implications for Tesla's U.S. business, other than that. I guess one thing that comes to mind is just that in Washington, we've absolutely seen, everybody united in sort of China bashing. And so to what extent does Tesla potentially have to deal with the nuisance of some letters going around about partnering with Chinese companies. There absolutely has been, really pitched criticisms of car companies in the U.S. working with Chinese companies. I think no more so than Ford with CATL, the giant battery company.
Yeah.
And we've reported in the last few months that Tesla would actually like to do a similar arrangement to what Ford and CATL have been trying to do in the U.S.
Is there a geopolitical element here in that he's made an unannounced trip to China while canceling his trip to India? Is there something worth reading into there?
I think it honestly, not everything that Musk does is rational. This is one of the more rational things I've seen him do recently. The India effort that they're making, they're trying to go from basically zero to ramping up into making India a significant part of their business. That's a really high risk endeavor, one that maybe the company can't afford to experiment with when it doesn't have a whole lot of margin for error, when the business is really struggling. China is a place where Tesla is doing an awful lot of business. They do have a significant presence in that market, even if their share there is shrinking. And if they can get some incremental revenue out of each vehicle that they sell there by offering a driving system, that's a significant win for them potentially.
A fascinating story that just keeps on going. Bloomberg Craig Trudeau walking us through all those details. We thank you so much for joining the program. Coming up, we look at your stocks to watch at the open, including Philips, after the company set aside cash to compensate claims related to a recall of medical equipment that threatens sleep apnea. That, Atos, a couple of others, will walk you through it. This is Bloomberg.
40 minutes with the Equity Open here this Monday, the 29th of April. We've got a lot going on this morning. The Equity Open is just one part of the story. The other one is what is happening with the Japanese yen. We have seen potential intervention this morning, bringing the level dollar-yen from kind of 160 down to 155 after we spiked higher. Paul Dobson, our executive editor for Asia Markets, joins us now for a couple of minutes to work our way through this story. Paul, the was it, wasn't it story, let's park that for the moment. Now what?
Well, now what extreme volatility looks set to continue at least through today's trading session. We've seen the levels of implied volatility in the market ticking up through today. And, of course, we've seen a pretty huge swing up and down in the market as well. So a certain amount of shell shock and uncertainty. But the market will certainly feel a little bit more kind of inclined to lick its wounds, having touched those very high levels at 160 earlier today. So maybe some consolidation, but the general backdrop is still, minded towards yen weakness rather than yen strength. We still have the very wide yield gap. So unless there's kind of really a definitive stance or statement, it's hard to turn this around and do anything else other than slow the losses for the yen.
You get a hawkish Fed Wednesday. Powell comes out with a punchy press conference. Do we get back to 160 quickly, do you think?
Yeah, well, that's the risk, really, isn't it? The other side of the story is, of course, the strong dollar, the higher U.S. interest rates for longer narrative. And that's really one of the things that's punishing not only the yen, but a lot of Asia's currencies as well. So that's what people are looking forward to and kind of worried about, just thinking about how much higher can we get on U.S. interest rates? How much longer can that higher for longer trade kind of be scarring for the yen?
Tom was bringing this up earlier. Are the Chinese next to intervene?
Really interesting. Well, I mean, they're doing their best to hold the yuan as steady as they can in any case. So in many ways, they're already intervening. And actually, they're seeing their currency strengthen an awful lot against the yen, along with everything else as a result. So that's actually, kind of a bit of a self-harm move, but sensible and constructive for the rest of the global economy and the backdrop there. So I don't think necessarily that devaluation threat is that big, but they will be mindful of what's going on with the yen.
Paul, thanks very much indeed. Paul Dobson, our Executive Editor for Asia Markets. Follow these guys. They've got some great coverage. TLIV Go, there's kind of all of that, and MLIV Go, two fantastic functions you want to be watching out for, Tom.
OK, back to one of the important corporate stories that we're covering as well in detail for you today. The French IT firm Atos updating its rescue plan. It now says it needs 1.7 billion euros. That's up from 1.2 billion euros in terms of its cash needs. The Paris-based company also says it wants to cut its debt further. Let's bring in our Paris Bureau Chief Alan Katz for the details. And Alan, of course, within that as well, this offer from the French state to take a major stake in a big part of the business. Where does this leave Atos at this point?
Well, it leaves us, I suppose, in a slightly better position than it was on Friday. It became apparent to everyone that Atos needed a good deal more money to continue going through 2025, which is what it formally announced this morning. The French government has been very clear that it's not going to accept what it considers to be sort of the most critical or the most sovereign parts of Atos' business. That includes some communications with the military. That includes, computers and control systems for nuclear power. But it was never going to accept that go into foreign hands. And so you have so far a non-binding offer letter from the French government that they issued over the weekend for various parts of this, which includes the cybersecurity part, the mission critical communications, and supercomputers for Atos. That's their offers. Atos said this morning that offers for 700 to 1 billion euros, roughly. The French government didn't say last night how much it was for. There's going to be some discussions because this is not just going to be a French government offer. It is just the French government at the moment, but the idea is that they would then bring in some private partners to help them to actually run the business. The French government doesn't want to be running this part of the business itself.
Alan, what kind of pushback might this get? Is this a done deal, or are we still waiting for some hurdles here?
Well, the hurdles might come from the conciliation process, which Atos is in, which is essentially a process with, particularly with bondholders, about how to manage its debt. And so I suppose you could have some of these debt holders who object to either Atos raising more money or parts of the government plan. The reality is, especially for things which relate to the military, is that governments in all over the world are very, very sensitive to who owns that kind of infrastructure. And so I don't think there's going to be any particular opposition to the French government plan, say, from bondholders. There might be arguments about money amounts and how much they think they should pay for it. But in terms of the idea that the French government was going to take control of this, that was fine. They already had a golden share from an earlier process in which they helped fund the company. And so I don't think that will be the issue. But there's certainly going to be arguments over money, possible haircuts for debt holders. So that it's far from over, this story. But I think in terms of whether or not the government is able to buy that part, that I don't think is much of an issue.
Certainly something we're going to be keeping a very close eye on. Bloomberg's Paris Bureau Chief Alan Katz walking us through that developing story. We thank you so much. And certainly a stock that we're going to be watching at the open. Joe Easton from our Equities team joins us this morning to walk us through not just Atos, but some of the other things on his radar.
Morning, Critty. So we're looking at Philips today as the Dutch health tech company books a provision of 982 million euros to help it compensate users of its sleep apnea devices that were recalled due to some safety issues. Now, this is actually much better than expected. Analysts at BI were expecting them to potentially book a provision of around 2 billion euros. And the CEO of Philips spoke to Bloomberg about the issue earlier today.
This actually puts behind us the vast majority of the claims, because those were in the US. That doesn't mean that everything is resolved. We, for example, still have the DOJ also investigating us, but that actually is now one of the last remaining pieces of the whole suite of actions that we have taken in resolving the recall. We have now, for the patients, remediated all devices. And as I said before, we also reached agreement around consent decree and the economic loss, and now the personal injury and medical monitoring.
So that was the CEO of Philips speaking to Bloomberg earlier. Now, this has been a huge issue for the company. The stock has been slammed by around 50% over the past 3 years as some of these devices were recalled, and that has also cut their profit estimates as well. And as we can see from the screen here, the sell ratings actually outnumber the buys on that one. Potentially, this is going to be a bit of relief for that stock today in Amsterdam. Then we're looking at Deutsche Bank. They are booking a legal provision of 1.3 billion euros. This is related to a historical takeover of a business called Postbank. The shareholders of that firm said that they should have paid a higher price for the deal, and Deutsche Bank today trying to draw a line under this. Now, the important thing here is it will potentially put one of their second buybacks into doubt, according to some analysts, including those at Morgan Stanley, saying that that could now be delayed in terms of those capital returns. It does come just a couple of days after this stock rallied when the CEO, on a call with analysts, did talk up the prospects of doing some buybacks. That stock trading near a 7-year high at the moment. Expectations elevated. Potentially, this is going to be negative for that one today. Then, with Atos, you were just speaking to Alan there, keeping an eye on this one. We are seeing some pretty significant calls on that stock. We can see the 1-year drop. It's a massive slump over the past year, given some profit warnings. If we take it back even longer, over 5 years, it's had a huge drop. It traded around €70. It now trades at less than 2. There it is on the screen, down 97%. Keep an eye on Atos, following all those headlines that you were speaking about moments ago.
Joe Easton watching for that potential stake price. We thank you so much for walking us through that story. It's a really interesting dynamic, guys. It's the Atos story, I think, is just one of it feels like almost a bigger trend that we're seeing in Italy and Spain as well, of where these kind of government stakes to protect pieces of the business. You've seen more and more of that, I feel like, even in just the last couple of months.
And I suspect you're going to see more and more of it. The industrial policy that has been driven out of the United States is encouraging more and more governments around the world to take kind of a more active approach. We'll certainly talk about that, I suspect, next. We're also going to need to be watching Spanish CPI. That's about to drop as well. We now have a time when Sánchez is going to make his announcement. I think that's going to be happening at noon, so 11 o'clock our time. All of that is coming up. The market is about to open here in Europe. We'll set that up for you next. This is Bloomberg.
Welcome back to Markets Today. A few minutes to go until the start of cash equity trading this Monday. European futures pointing higher by 0.3%. US futures also in the green, looking to build on the best week since 2024 for US stocks. And the key question, of course, for these markets is, do the earnings story continue to propel and give these equity markets and these stock stories a lift versus the macro, or does the concern switch to a potentially more hawkish Fed?
It feels like an M&A morning, though. It doesn't feel like an earnings morning. I know we've had Phillips out with numbers, but you've got Hypnosis. That's a story we're watching. You've got the Anglo BHP story that's developing. We're watching Atos this morning, potentially the French state taking out bits of that business that they feel is strategic. So there's an M&A theme. I appreciate we're going to get into the earnings theme a little bit later on in the week.
Yeah, I think the BHP Anglo story is really, really interesting because over the weekend, I think the reporting was around the idea that there are more offers to come from BHP. The criticism of it on Friday last week was that the premium was not high enough, that this wasn't a juicy offer. But I'm curious what the premium actually is. You love to talk about multiples in the States versus London. Yeah. Is this the moment where people kind of wake up to the premium story at a time when copper capacity is a real issue?
Well, you can compare and contrast. If you look at the mining sector, you can actually compare them. You've got the same company with dual listings. You can see the multiple difference, the different rating that are put on London listings and Australian listings. But I think the Elliott thing is really fascinating. Yeah. Because Singer could basically turn around and say, you've got to listen to these guys, you've got to talk to these guys. His involvement potentially makes it easier for others to come in and get a deal done there as well.
And he's been building that stake over a period of time. Yeah. And well, clearly, look, private equity has woken up to the relative valuation here in the UK, certainly. The market's opening up in 10 seconds. Futures pointing higher then here in Europe by 0.4%.
OK, European markets are about to open. Let's take a look at where we are expected to go. We're expecting a positive session, really, from the start of play this morning. But some of the single stocks on that M&A story are going to be interesting. Interestingly enough, in terms of the points, Novo out of the gate pretty quickly with an upside move. Remember, we've got Novo Nordisk reporting numbers this week, plus you've also got Lilly reporting numbers. Those two companies are the giants in the GLP-1, the obesity drug sector. We've also got a lot of ex-dividends in the morning, this morning, so I need to just check my list and make sure some of these downside stocks aren't XD this morning. But the drug stocks are out of the gate pretty strongly. AstraZeneca and Novo Nordisk both adding the most points on the upside this morning already to the stock 600. I'm
looking at the UK index here. Anglo-American, right off the bat, higher by about 2.6% this morning, perhaps waiting for that yet another takeover bid. We are seeing some kind of broad strength when you look at the sectors. Look at this, green on the screen across the board at the moment. The leadership, at least what I'm seeing at the moment in terms of index contribution, seems to be back to that cyclical trade. Banks and commodity names seem to be the big movers this morning.
It feels like at the moment that the narrative coming out of stocks is actually we can cope with this and the economy is going to continue to do well. You're getting this re-acceleration in Europe in terms of the economic data that we're seeing, albeit from kind of relatively low levels. We'll see whether that sustains through the PMI prints. We've also got the CPI prints coming through as well. That you would have thought would, at the kind of the get-go, appear to be a kind of cyclical driver. So do you want to go for those cyclical names, as Critty says? On
the inflation story then, Spanish pre-lin April harmonised CPI coming in line with the estimates. This is year-on-year, 3.4% increase year-on-year. That was in line with the estimates, 3.4%. So it seems nothing dramatic to worry about when it comes to the story around Spanish inflation, which, as Critty was pointing out, has been on that downward trajectory.
I think we should go to our Spanish correspondent to talk about this.
Let's bring her in.
I'd love to. Hello. Can I also point out that one of your kind of biggest movers in the Eurostock 50 is Banco Santander this morning, actually. Even though you are seeing a broad move in the banks across the continent, that's going to be your big one. I think what's really interesting about the Spanish CPI story, though, kind of keep an eye on the relationship between the macro and the actual corporate story, simply because Jamie Rush, our chief European economist, has specifically said that Spanish inflation data can, not always, but can be a leading indicator for the broader inflationary story. At a time, by the way, we're seeing inflation perhaps moderate or at least stay in line. We're not seeing that uptick in Spain, whereas the unemployment numbers are a bigger kind of point of concern for Spain, especially when it comes to the kind of the broader employment story with the ECB.
Can I just come back to the UK? UK banks are higher this morning, which I think is fascinating, in as much as there's a note out from UBS talking about the idea that a new Labour administration, which we may get at some point this year, potentially could see the banks as an area where they would look to increase windfall taxes. So it's interesting that the market's not reacting to that at the moment. We've got a big, got a small election coming up on Thursday, local elections, but actually could have a fairly outsized effect in terms of the impact that it has in the run-up to that general election, which could be coming up a little bit later on this year. So Spanish data comes through largely in line with expectations. And you've got this kind of interesting compare and contrast now kind of across the Atlantic. What is going to happen with the ECB? Inflation seems to be much better behaved over here, but the economy looks like it's stabilising. In the States, clearly inflation is not being better behaved, and we're going to learn from the Fed exactly what we are going to see done about that come Wednesday. Let's try and plug this in. Emmanuel Coe, Barclays Head of European Equity Strategy, joins us now. Nice to see you this morning. Look, we've got a situation where it does feel like there's an economic divide developing. I just kind of want to think about how this week develops. The Fed is having to deal with an economy that is clearly running above potential and maybe has a look at slowing it down. Is there a read across from what the Fed does this week into European equities? How should I think about that trade with relation to what the Fed is looking at?
Good morning, Guy. Yes, I think there is a read across. And of course, the kind of central bank's policy setup in Europe is going to be somewhat constrained by what the Fed is going to say, is going to be doing. We still believe, European central banks, ECB, BOE, will act independently from the Fed. So we are looking for some divergence. We think the Fed cannot cut interest rates. So we look for the Fed to wait and see. We have one cut for Q4 this year from the Fed, but we have 3 or 4 cuts from the ECB and the Bank of England, right? So I think the growth policy setup is quite different between Europe and the US. Europe is seeing slowing inflation. That's not the case in the US, and we think European central banks can act on this slowing inflation.
What we do have, though, is it appears to be a very early, and it feels very early green shoots at this moment, European growth recovery. You put a few rate cuts on top of that. How does that affect do I want to be buying cyclicals into that kind of a narrative here in Europe?
Yes, you want. We've been advising that. We've been pushing this, divergence and this kind of shift away from US into Europe, more like rebalancing. We still believe the US market can stay strong as long as big tech is staying strong. But I think the broadening of the rally in the US might be challenged by the lack of Fed support. In Europe, if you are seeing central banks coming to the rescue, providing some life back into the domestic economy, then you can see the domestic cyclicals, the financials, the banks, the small caps starting to participate as well. I think for the consumer in particular, lower interest rates are very important development for Europe and could help to provide some support to final demand in the second half.
So that's the macro of it. Let's talk a little bit about kind of the nitty-gritty. The buyback story is my obsession, as Guy and Tom will note. How much of a difference does the buybacks make to how much the stock 600 can rally?
Sure. I mean, we've been writing about that last week and got quite a bit of interest from clients. It's a very macro-heavy market, but I think sometimes the market is missing the fact that when you are buying equities, you are buying, stocks, you are buying earnings, and, we are now seeing a bit of self-help potential coming back into the corporate sector. Buybacks announcements in Europe are up significantly this year. Maybe some of the air pocket we had in the market last month was due to the fact that a lot of companies were in blackout periods. There were not many buybacks. But this is going to change again. In the next couple of days, with the bulk of the earnings being behind us, we should see more buybacks, activity coming back. And that can be a bit of an additional support to the equity market. And look, for some sectors, like financials in particular, commodities, energy, some of the very cheap value traps, which have been really struggling for years, this self-help could be a game changer and help to get some investors coming back to those sectors.
It's a very American playbook, I have to say, by deploying the buybacks thing. But I'm curious about how sustainable that actually is. If we're talking about on the macro front, that profit growth is perhaps going to slow down or some sort of kind of weakness will take place in not only the European market, but just broadly in terms of being able to capitalize on the margins in the States and internationally, does that create a lot of room for sustainable buybacks? I mean,
buybacks are a derivative of earnings, right? Obviously, if you think earnings are going to slow, whatever the reason, buybacks will follow. But that's not our view. We think that earnings could actually be picking up in the second half. The base effects are going to be more favorable into H2 for earnings, in particular for Europe. But, we are seeing, again, financial this morning, a lot of banks reporting very strong numbers. So, earnings so far seems to be tracking this positive inflection. PMIs last week are pointing to improvement in growth in Europe. You have a very strong balance sheet situation, a lot of cash on the balance sheet. And, we think that, that can help to sustain some of this, corporate support and self-help. So buyback should help this market amid a fairly complex, macro tape, obviously.
Emmanuel, we were talking, Guy was pointing out that it feels very much like a mergers day as well, particularly when we think about Hypnosis and Dark Trace towards the end of last week and, of course, the Anglo story that continues. With that focus on the UK, when do the public markets start to see what the private markets are seeing when it comes to UK assets, UK stocks?
Look, I think there are different drivers of this aversion for UK equities globally. I mean, obviously, the lack of tech is a kind of fairly old economy nature of the UK market has not helped over the last couple of years. Sentiment around, Brexit, political uncertainty has been dragged as well. And look, some of the stocks you have in the index have been seen as kind of value traps, not being able to help themselves and to, drive some kind of re-rating. So, look, macro is what it is. But if we are seeing a bit more self-help, consolidation, buybacks, M&A, that could maybe revive some of the equity appetite for the UK. Look, I think for the domestic part of the UK equity market, FTSE 250, for example, we expect a fairly supportive growth and policy development. As you said before, we should be able to cut rate into summer, and that should provide some support to domestic activity. So, the FTSE 100 is very global driven. You have a lot of commodities, financials, not much tech, but the FTSE 250 could be a better way to play some kind of improvement in domestic growth in the UK.
And the UK remains rich picking still for private equity and others?
Yeah, I mean, clearly there is some interest. We are seeing inbound M&A picking up. We are seeing private transaction picking up as well. So I think the valuation case for the equity market is very clear. It is a very cheap market. Some of these companies are somewhat mispriced because they are quite profitable. They are quite, performing on the global landscape. But, they are having this UK tag, which is coming with a bit of a discount. And, private money is starting to arbitrage this kind of cheap valuation. I think, public markets are a bit behind. But we need to see maybe some uncertainty moving away with the political environment. And I think the upcoming election might be an important catalyst for that.
There is an argument growing that the Federal Reserve needs to do something about the stock market because the stock market is having a big influence on financial conditions, and financial conditions are having a big impact on inflation, i.e. they're loose and therefore the economy is running at above potential growth. If the Fed decides, and it may not go at this directly, but if the Fed decides that ultimately it needs to reduce that impact, what does that have? What is the effect of that on global markets? What is the effects of that on Europe? If the US stock market struggles, is that a reason to buy the US stock market or to buy other stock markets? Do I look to buy the dip in the States, or do I look to seek defensiveness elsewhere and a European economy that's already benefiting from rate cuts?
Well, I think you have to think about what would be the reason for U.S. market to struggle. Is it a tech issue? Are we seeing the tech leadership fading? In that case, I think non or less tech-heavy indices can still perform if you have some rebalancing away from big tech to other sectors. If we are in a fairly supportive global growth environment, I can see, other market performing well, even if the kind of, tech-heavy U.S. market does not perform. When you think about Europe, you think about, obviously, the domestic economy, but you also think about China. China is still very challenging, but we are seeing in the last couple of weeks better price action in the Chinese equity market, which helps sentiment around Europe. Now, if you tell me the U.S. market is going to struggle because the Fed has to push really hard on the brakes, they need to slow the economy and they need to damage demand in order to get inflation back under control, that's probably going to be pretty bad for the global equity market. Ultimately, the U.S. market is a bellwether for risk sentiment, for wealth effect, and I don't think the cyclical nature of the European market will work in an environment where the market is starting to worry about a policy mistake from the Fed.
So the cyclical doesn't work. If we get a Fed, if we get a J Powell who pivots hard then on Wednesday and suggests that not only are no cuts coming through this year, but also maybe even opens the prospects to another hike, the parts of the equity market are the most sensitive to that outcome. It's not the base case for Bloomberg Economics, but it's clearly something that's being discussed.
Yeah, no, I think as long as the Fed is not closing the door to cuts down the road, I think that keeps some degree of positive optionality in the market. Now, if you have a proper U-turn, a proper pivot from the Fed when hikes are back on the table, I think the market will have to price a higher degree of policy, mistake and risk, right? I would just say that, today compared to maybe 2 or 3 weeks ago, the markets are no longer priced for perfection. We've seen a significant hawkish repricing in the rate market. Market are pricing just like one cut for this year, which we think is fairly fair pricing right now. So I don't think the market is, vulnerable to a very hawkish price from the Fed, but of course the wars will matter, and what you want is still the Fed to be leaning towards cut, not hikes, for the time being.
Okay, Emmanuel, cool. Thank you very much indeed. With the smart takes, of course, across the different aspects of these markets. European equity strategy at Barclays, Emmanuel, cool.
OK, let's talk a bit about what's happening with the call that we watch here in Europe, the Core 6. This is what they are doing this morning. Remember, Novo Nordisk is going to be reporting numbers a little bit later on this week. Luxury looks like it's under a little bit of pressure. LVMH, Ferrari, both softening up a little bit. Schneider getting a little bit of traction. But Novo, I think, over the next couple of days, along with Lilly, I think going to be a really interesting story, just in terms of the demand picture they are seeing and the ability to meet that supply. So on balance, Europe kind of hanging in there today, but there are other stories. We're moving into the earnings season, and that's going to be coming thick and fast over the next few days. But today, more of an M&A theme. So let's talk about what is happening here. There are some corporates reporting numbers. Let's get some details on what is happening. Joe, over to you.
So we are seeing some absolutely massive pre-market indications on Philips at the moment over in Amsterdam. It is actually in a trading halt following news that they are setting aside this cash to settle those claims related to its sleep device. I was seeing it trading at around €27 in the pre-market indications, but not yet getting a firm price. You can see it trading at less than 20 on Friday, so we'll wait to get a price on that. But that does look set to be one of the biggest decliners for sure that we'll get today. Then a couple of other earnings just to bring you. Porsche, they've had some weak numbers, mostly related to China. They say they've not seen strong enough sales over there today. That one is down 2% over in Germany. And Beazley, just quickly in UK insurance, cybersecurity insurance, some soft sales out of the Lloyd's of London insurer this morning. So that one heading down very slightly. Hopefully we might get a price on Philips in a few moments. But we'll take a look at Atos, up 14%. The French government potentially buying some of the business there that they see as strategically important. Huge news for them. It's trading at €2.18 at the moment. As I said, it was trading a few years ago at around €70, so it's a massive way back, but it is up 14% today. And a Hypnosis Songs Fund gets another improved bid. This is from Blackstone. There is a private equity battle for the music royalty firm here in London. That does continue. It's up 2%. The Hypnosis board has backed that revised deal, but that could continue for a while. Morphosis, briefly, there's some weak drug data out of that company. It's a cancer treatment company. It's being taken over by Novartis. Analysts, though, warning that that deal could potentially be scuppered by that weak data from the company there. Then we'll take a look at those banks. You did mention some of them earlier. There's Deutsche Bank down 4.1%, a provision related to that Postbank takeover. Negative news for the company there, potentially delaying some of their buybacks. BBVA, we had earnings out of Spain from them. We're up 1%. The net interest margin's looking pretty good on that one. And Guy mentioned the UK bank story with this note from UBS. Will a potentially Labour government look to cut the amount of interest that's paid by the Bank of England to banks that keep money at the UK central bank? Not seeing a huge reaction. NatWest, maybe that's weighing on that one over those earnings last week, down 0.9% for that one today. Then a couple of morning calls to bring you. Firstly, JD Sports gets a downgrade. This one over at Barclays, they say that it's not a good time to be doing M&A in the US given the recent weakness in the sports apparel market. They downgrade it following JD Sports' acquisition of Hibbets just a couple of weeks ago. But on the positive side, we got Nordic Semi, strong numbers out of them last week, and we get an upgrade. This is over at Jefferies. They actually like the Internet of Things business. It's semiconductors. They supply into that communication between technology companies. That one up 5%, a decent gain for that. Nordic Semi over in Oslo. That gets a buy at Jefferies, and it's up 5% this morning.
All right, Joe Easton from our Equities team, we thank you so much for walking us through some of those micro stories. We go from the micro, too, back to the macro. We are keeping an eye on dollar-yen here, which is near session lows. We're at a 155 handle on the currency pair. A sharp move. Our producer Dan Curtis pointing out these moves seem to be happening at the top of every hour. Of course, still no confirmation from the Japanese authorities of whether or not they have intervened. But historically, they usually don't say it until 2 or 3 days later, if they actually did.
Yeah, Sam Zeef, of course, of JP Morgan Private Bank, telling us that he senses that it probably was intervention. Yep. The last time they did it, of course, 2022, you saw these kind of moves, and they went 3 times. So that's the context for 2022. 155.75 right now in the end.
It is a Japanese holiday today. Light liquidity conditions gives them an option maybe to push the market around a little bit more. I find it interesting they've gone before the Fed, but the move through 160, the market also taking advantage of those light liquidity conditions, maybe push through 160. That triggers the BOJ to come in. As Tom says, the beginning of the hour, looks like we're getting moves lower. I wonder whether the BOJ is having another crack at it to try and kind of reinforce that position. It's all speculation at this point.
Is it, or is it traders front running the move? We don't know.
Maybe you could, but the idea was that, and we've been talking about this over the last few days. The idea is that the BOJ is going to struggle to hold this move, sort of 155, 156, and that the market's going to see without kind of significant policy, without kind of policy convergence, i.e., the BOJ maybe moving rates to the upside, that the opportunity is going to continue to be there. For the market to continue to kind of have a sort of attack these kinds of levels.
But you know what's so interesting is that we can't actually pinpoint where the line in the sand actually is. And I wonder if that's almost by design, that we're not waiting for kind of 152 or 155. There was so much speculation. Now it's all over the map. And I almost wonder if kind of, whereas we often hear from Jay Powell, for example, or critics of Jay Powell, he needs to guide the market, he needs to work on his communication. You say the same thing for the BOE and the ECB as well. Maybe this is where the BOJ needs to actually have a little bit of a surprise element in terms of...
Well, it gives them the optionality.
You can't tell the market where the level is because...
But they have in the past, right? They've guided and they've had these kind of significant lines, and this time you really can't tell.
No, and you do wonder whether the line is above 160 next time. Yeah. It's interesting that the funding currencies tend to have... the central banks around the funding currencies tend to have this strategy. You look at what the S&B's had to do in the past. Like the S&B is a bank that has shocked the market in the past. The BOJ has shocked the market in the past. The PBOC is another example as well, and I think it's interesting that people are now talking about that being potentially the next shoe that we should be watching for. Yeah, weaker, of course, versus the US dollar, but stronger versus many of their major trading partners outside of the US, so they're contending with that. And again, the speculation, and Bloomberg's been doing the reporting on this, the view from some remains an outlier view that they could intervene pretty significantly to weaken that currency to help support that economy. And that is a factor that some people are now starting to consider, even if it's an off chance. That is something worth considering. Yeah, the impact of the dollar, sorry.
I was about to say, no, go ahead. You read my mind.
The dollar is kind of the linkage in all of this.
Yeah.
And we're building up to Wednesday. How hawkish is Powell going to be? Yeah. Is this another Powell pivot that we're about to see, but in the opposite direction, trying to potentially undo what he did in December?
And the reaction off of it, going back to the kind of Asian currencies, you've already heard from the Bank of Korea, from the Bank of Vietnam, from the PBOC as well, saying that we are watching the currency level. We're watching the volatility. This is not just a Japanese story anymore, but does Jay Powell care? Maybe not.
Our currency, your problem. Anyway, up next, we're going to turn to what could be one of the biggest mining deals in decades. We're going to be talking about Anglo-American and BHP. But you've got to throw now in the Elliott story, Paul Singer getting involved. We'll bring it all together next for you. This is Bloomberg.
Welcome back. We're checking the stock on Phillips because it is soaring right now, up 33% on the back of the news that came out around 6 a.m. UK time, 7 a.m. of course over in the Netherlands, that they have managed to come to a settlement in the US around their sleep apnea devices, and it's the settlement number that investors are latching onto because it is far below the estimates that many had been expecting. 1.1 billion US dollars. There were estimates of 5 billion, so it's significantly below what many had thought, and the stock benefiting on the back of this. Prior to today, you'd seen year-to-date the stock up just 6%. They've struggled with it since 2021, and it has now put something of a line around this particular issue. They still face a probe by the Department of Justice for another particular issue. The CEO speaking to me earlier saying he couldn't comment on that, couldn't give us an update, but that is another potential fly in the ointment for Phillips. But for now, some relief from their investors about the outcome when it comes to the sleep apnea devices.
China headlines as well dropping. It looks like we're starting to get some guidance around exactly what Xi's trip to Europe this week is going to look like. Normally this would be something that would be kind of having a big impact. Everybody would be watching this story very, very carefully. He's going to Serbia, but he's also going to France. He's going to be meeting Macron later on this week. And we talk about the impact that a recovering China could have on Europe. It's going to be interesting to see whether we get any deals done. I wonder whether we should be watching Airbus this week. Fascinating that he's going to be seeing Macron.
Airbus is going to be a really interesting one to watch, isn't it? So Macron has tried to have that constructive relationship with President Xi Jinping, and this is the potential fissure, the potential dividing line, of course, in the years ahead when it comes to Europe versus the US, just how hard presidents like Macron want to go in when it comes to that relationship with China.
Let's talk about the BHP story as well. We understand potentially they could be looking to make another offer for Anglo. The first one falling flat. What kind of a deal would that ultimately look like? Let's get a sense of how this could work and what we're going to be looking at next. Mark Burton joins us on set. Mark, the initial offer was kind of rejected. We probably expected that was going to happen. What do we know about what the second one will have to look like to gain more traction?
Well, to try to sew all of the analyst and investor commentary that we've seen together, it's clear that there will need to be a very substantial bump, but it's clear also that BHP is really going to need to thread the needle with the offer it presents, and I think there are two issues that make this a particularly kind of thorny offer. One is about price, and then the other is about the structure of it too. And BHP is going to need to present an opportunity that Anglo investors like, but its own investors don't hate. And then the structure of it, we have the South African government in the frame, very concerned about what it would mean for the future of the South African businesses, and you also have antitrust authorities, particularly the Chinese government, with a close eye on what it will mean for the copper market.
Just in 30 seconds, what impact is Paul Singer going to have on this story?
So even, I mean, the hurdle to get this done is very high for BHP, but I think even if it's not the one to win the Anglo business or it walks away, I think the future of Anglo looks very different now. It's been
Elliott's going to say you need to sort this out and do it quickly.
Exactly. Elliott's involvement in the stock, I think it represents something that people have said about Anglo's business for a long, long time, which is that it's effectively a conglomerate of the commodities world, and it needs to decide the future of those businesses.
Well, thanks very much indeed. This is Bloomberg.
When you think about Europe, you think about obviously the domestic economy, but you also think about China. The US market is a bellwether for risk sentiment, for wealth effect, and I don't think the cyclical nature of the European market will work in an environment where the market is starting to worry about a policy mistake from the Fed.
Emmanuel Coe, the Barclays head of European equity strategy, speaking with us earlier, saying this may not be a U.S. story. It's really more of a China story when it comes to how high European stocks will go. Let's get another view here. Joining us now this morning, Sebastian Raedler, head of European equity strategy at Bank of America Global Research, joins us right here on set. All right, so is Europe the catch-up trade to the States, or is Europe the reaction trade to China?
Well, that's a good question. I would say it could be the catch-up trade to the States if you think the cycle continues. If you think you can hike the Fed fund rate by more than 500 basis points and the cycle never stops. If so, then Europe could benefit because if the cycle continues, US growth will not accelerate. European growth has scope to accelerate. It's in slightly negative territory. So the question really is, will the cycle continue? Are we at the very end of the cycle? I think it's the latter. And then, of course, you don't want to be long European equities.
So more of a US catch-up trade then over than China?
Well, it depends. I think all your questions are aimed at the upside. So if you think basically, is there going to be upside? I'm saying it's very likely within 3 to 6 months we're going to see unemployment rise in the US, as it always does at this point in the hiking cycle. And then, of course, you're not catching up anything. You're catching down. And then you're asking very different questions.
How close are we to the highs being in for European equities?
I think you asked me earlier, and I think we might have seen the high. It really depends now how quickly are we seeing the pain in the labour market, the cracks in the labour market. I would not be surprised if we see them within the next 3 months. And then you could have a very complicated pathway where in the near term you got these inflation jitters in the US. Yep. And by the time they are ironed out, you're basically looking at labour market pain. And in that case, you could have seen the high already.
Is that a hard landing you're describing in the States?
Yeah, I'm trying very politely.
Yeah, I know you are. And I'm trying to get you to say it. If Powell's hawkish this week, does that further reinforce your conviction that that is ultimately what we're going to see?
No, it's very interesting. For me, there are basically two narratives. There's the near-term rates might be slightly higher and it puts downward pressure on equity multiples. But that really doesn't affect the macro story because, crucially, rate hikes affect the macro narrative with a lag of around 1 to 1.5 years. The worry that you really have is the impact of all the hiking you've done over the last 2 years. What they do right now is not relevant for the macro.
But just to jump in, the concern now is that actually the rate policy doesn't impact the economy, but financial conditions do. Yep. And it's that transmission into things like the stock market which could have the biggest effect.
I think that's a very important distinction. There's basically the impact on multiples just from a higher discount rate, and there's the impact on what happens to jobs, what happens to unemployment in response, basically. One is the valuation impact, the other one is the macro impact. And I say the valuation impact could be there in the near term, but the macro impact is coming. That's what you've been prepared for the last 2 years. You just haven't seen the impact yet, but it will likely be here within the next 3 to 6 months.
So what specifically across the equity space breaks in an environment where rates are not cut this year?
Yeah. If rates are not cut, you effectively see so far only 20% of US corporates have refinanced their debt at higher rates. So therefore, they haven't had any need to lay off people to lower variable costs. The way hiking cycles work, in my understanding, is you hike, then initially nothing happens and everybody goes, this is great, the economy is very resilient. Then people start to refinance at higher rates, they get margin pressures, they try to defend the margins by lowering variable costs, which means you fire people, the unemployment rate goes up. And if there's one indicator that says end of cycle, risk premium spike higher, it's basically a rising unemployment rate. We haven't seen it yet, and I think it's in the pipeline.
Yeah, you keep coming back to that. It's really interesting. So we continue to watch then the jobs data out of the US, and of course we have non-farms at the end of this week. Your view on Europe, though, the pushback would be we're going to get an ECB cut, the growth picture is improving, and the earnings story suggests that resilience is there. That's the pushback, the view, the constructive view on European stocks.
Yeah, I don't think so much as an earnings story. So European 12-month forward earnings, they peaked in October, they're down around 2%. They really haven't done anything. But I completely agree with you. There's a really interesting battle of narratives between domestic growth momentum in Europe improving, credit conditions are easing, the credit impulse is positive, PMIs have started to come up. But then you see these ominous signs about the US labour market. And then every investor has to ask themselves, if these two giants go up against one another, who's going to be more powerful in terms of their market impact? And I think there's no question. The moment the labour market rolls over, it's always the dominant force.
Oh, me. Let's talk about currencies here. Sorry.
Pretty's going on holiday on Friday. She's got
I thought I was waiting for Tom and Guy to hop in. Talk to us about the currency impact here. Guy loves to point out that every time we see that tick-by-tick move in the euro and in the pound, the macro level, kind of the FTSE and the stock 600 react. If we're talking potentially about this dollar strength story being the ongoing narrative, does that create a tailwind for European stocks?
I think it absolutely does, but I think it always comes back to the same point that you have to make as an investor. What is the relative strength of the forces? There's a field of forces. What's the relative strength of the forces involved? And I would say if you have to have a ranking, it's macro momentum is by far the most important determinant, and it's the US that is more dominant relative to Europe. Then there's the interest rate, that's the discount rate that Guy was mentioning, and then FX comes third. So all other factors being equal, it's a positive, but once the macro starts to move, it takes the backseat.
Once the macro starts to move, everything else takes the backseat. We're going to get dips. What is a buyable? You must be now thinking about kind of what comes next. Clients must be coming to you and going, OK, so if your theory is right and we're going to see this playing out, What do I buy the dip? Do I wait? What's the tactical story over you're talking about the next kind of 3 to 6 months as the labour market cracks. Talk me through tactically how I play that period.
Yeah. So I think everybody is holding their breath and has been holding their breath because we've been waiting for this macro weakness. And Guy, you and I have discussed it.
We've been doing this for a while.
Exactly. If you believe that it's coming, and if you think you cannot get away hiking rates that much, then there's a very obvious trade. European cyclicals versus defensives are at a 30-year high. The Schiller P relative is at a 30-year high. You've got food and beverages, the most defensive sector, it's a safe haven, on the floor, in the gutter, with the teeth kicked out, effectively. Yep. So if you think the macro story changes, there's an amazing buying opportunity. And then you go long staples relative to the cyclical high flyers that have benefited from the compression of risk premia. That's capital goods, that's construction materials. That's your pair trade if you believe in the rollover story.
OK. What are the early signs that that's beginning to play out? What am I looking for?
So I think your team has actually prepared a chart. I'm not sure whether we can...
Trying to tee this up.
Yeah. So I can call on the producers here. So you want to look at hiring intentions for US corporates, because the big question is this time different? It's actually the other chart. So if I call on the producers one more time...
We'll get there, don't worry.
The question is this time different? Do high rates maybe not cause any damage this time around? And so you look at hiring intentions, and what you see here is the NFIB hiring plans. So NFIB, these are the small to medium-sized companies. They account for 70% of employment. They haven't increased their maturities, and look what their hiring intentions are doing. They're rolling over very sharply. They're already consistent with an unemployment rate of 6%. They lead unemployment by 3 months, and this is showing us the small companies that actually employ Americans, they're feeling the pain, and they're responding in the way in which they always do.
AI, though, is going to come to the rescue, isn't it, with those productivity gains? What do you think? I mean, the story last week was the story. It was the AI story. I mean, Meta has its challenges. There's punish for the spending. But investors are still riding on this, and the monetization story is coming through for the likes of Alphabet and Microsoft. So how do you get skin in the game on that?
Yeah, that's absolutely right. And I think what makes the current situation so interesting and so engaging is that you have this normal hiking cycle. The question is this time different, and then you've got this AI productivity boom overlay, and you say, is that maybe going to blow everything out of the water? So I think we've got a second chart here that we wanted to show. Right now, he's
done this before, by the way.
I was gonna say, yeah.
We'll get it. It'll come. Just keep talking, and it'll appear as if by magic.
Fantastic. So one feature right now, and it's exactly as you say, you see the footsteps already of the beliefs, the footprints of the belief in AI. Right now, the global equity risk premium is at the lowest level since 2002. We have never seen such a low risk premium. And as you can see, it's very nicely explained by the fact that US productivity growth has increased. It's basically rebounded from negative territory in 2022 to 2.5% now. And so the question is that already AI? And if so, will that continue? So if you get more of a productivity boost from AI that could further lower the equity risk premium and could basically generate an equity bubble. And a lot of our clients are really worried about missing that bubble. And so then you have to, again, gauge, is that a likely narrative? And what we are saying is the papers we find suggest at most AI is going to boost productivity growth by 100 to 150 basis points. That's effectively already priced. And the question still is that a cyclical rebound, what you've seen already, or is that already AI? And we're saying very likely the impact of AI will only come in the next 2 to 3 years, not right now. So the market is pre-pricing something that will only happen in the future.
It's interesting because a lot of people we're talking to are suggesting that actually companies are really struggling to figure out their business models.
Exactly.
And they can't make the productivity. There's lots of plans out there for how AI is going to work, but actually a lot of them, according to the experts, are really going to struggle to deliver on the rate of return that maybe they're anticipating.
I think that's exactly right. So in my mind, you had a cyclical rebound because of the swing in the fiscal policy in the US. Yep. Investors looked at it and say, that's AI, it's already here. But as you say, very likely it will take longer, and the market will only be able to sustainably price it once it really happens.
And that's maybe 1 to 2 years out, yeah.
We love guests that comes with props, don't we?
Fascinating. Yeah, fantastic. More props, please. Balloons, maybe.
I'm out of tricks.
Yeah, OK.
that was some good tricks there. Absolute pro. Thank you very much indeed, with some fantastic views as well, really interesting views, and the analysis there on these markets. Sebastian Raedler on some of the consequences we could be thinking about. Head of European Equity Strategy at Bank of America Global Research. Now, all eyes are on Spanish politics, certainly Equities are, as the Prime Minister is set to announce midday today if he'll resign or stay in office. We discuss the implications for the Spanish political landscape. That is next. This is Bloomberg.
it's actually remarkable how little Spanish assets have been affected by the political uncertainty. And this has actually been the story throughout for many months and indeed years. Spain was relatively less affected by the energy crisis and the inflation shock compared to the rest of Europe. The economy is performing better than many of its peers. So I like to think that that will remain the case.
Federico Sánchez, senior analyst for Europe over at Eurasia Group, walking us through some of the dynamics in the Spanish economy. Look, I think this is so fascinating because when you look at Spanish macroeconomics, it almost doesn't make sense, and yet they are indeed outperforming. And that's kind of that nuance that Federico was just talking about. Add on the politics to it, where today we're expecting to find out whether Spanish Prime Minister Pedro Sánchez will indeed resign. His deliberations on staying in power come as a court launched an inquiry targeting Sanchez's wife for alleged influence peddling. Let's get more on the story with Bloomberg's Ben Sills all over it. Ben, this is fascinating for so many reasons because it's coming at a time, of course, when the Spanish economy is outperforming. There seems to be a real complacency, a lack of sensitivity into it from investors. What should we be watching out for?
Well, obviously, like the main news today is going to be whether Sánchez decides to stay or to pack it in. Beyond that, though, the issue is, if he goes, on what terms is he going to go? Is he going to try and install one of his allies to maintain this complicated multi-party majority that he's got in place, or is he just going to walk and call a snap election, which would really trigger chaos in Spanish politics? And if he stays, he needs to come up with something. If he wants to stay after this really unprecedented 5-day period of reflection, he's going to need to have some kind of gesture, some kind of moment to restart, to renew his mandate in charge of the country.
And Ben, the politics is going to be tested, isn't it, in the next few weeks? Because you have the elections, the vote in Catalonia, and then, of course, you have the European elections as well. So how is the thinking of the Prime Minister kind of tying in to their electoral prospects?
Well, the Catalan elections is actually the really interesting thing. That's happening in just under 2 weeks. And the reason that matters is that if Sánchez is going to renew his majority, his majority, he needs the support of the Catalan separatists. That would mean them standing up in the parliament in Madrid a few days before they go to the polls in Catalonia to support the socialists, and then several days later asking their supporters, the voters in Catalonia, to back them against the socialists. So it's a very awkward moment for Sánchez to actually get the support of the Catalan separatists. But if he can pull it off, would boost his chances going into the Catalan elections.
Ben, what are the implications if he does go for Spanish business, for the Spanish economy?
That's the million-dollar question. As you were saying in the intro, Spain's got this strange position that the economy is doing really well. The politics has been a mess for a very long time, and it looks like it's going to get messier. The thing that you would really want to see is some kind of more authoritative government in position, whether that's Sánchez with renewed support or whether that's the right-wing parties coming in following a snap election, who can push through the reforms that the EU is calling for and unleash these billions and billions of euros in recovery funds that at the moment Spain is set to miss out on at least some of.
And Ben, there's a couple of government stakes that seem to be at play here as well, no? When it comes to Telefonica, when it comes to, I think, Talgo, the train maker as well. In terms of the deals picture, in terms of the government stakes that we've seen the Sánchez government kind of heavily involved in, could that change amid a potential Sánchez departure?
That's a good question. I think that the Telefonica issue, which is probably the most important one, that's part of a broader European shift to be slightly more protectionist, to be slightly more sceptical about foreign investors, particularly foreign states, taking and making investments in strategic companies. You would have thought that if the centre-right PP were to come into power, they might be slightly more liberal about that sort of thing. But the direction of travel in Europe is very much towards more protectionist, more investment shields and policies of that nature.
Ben, great stuff. Thank you very much indeed for the update. We'll look forward to that news and the coverage around it a little bit later on. I'd also maybe get everybody to cast their eyes towards Scotland a little bit later on as well. You could see the First Minister resigning. I see The Guardian reporting that this morning. You've got The Times reporting that. A number of UK newspapers suggesting that Humza Yousaf could be poised to quit. So we'll keep an eye on not only Spain, but also, Tom, what is happening in Scotland. That could have implications as well for a UK general election.
Yeah, Humza Yousaf, and of course, after they broke up their coalition with the Green Party as well. So the travails of the SNP continue. We continue to monitor that story as well. Switching focus to the Middle East now, though, because the US Secretary of State, Antony Blinken, is in Saudi Arabia right now, where he's going to attend the World Economic Forum meeting. Blinken is expected to meet with foreign ministers of the GCC, the Gulf Cooperation Council member states, and the Turkish foreign minister as well during that forum. Let's get more then on this and bring in Bloomberg's Middle East anchor, Jumana Vasechi, in Riyadh. Jumana, what should we expect then from this visit by Blinken to Saudi Arabia?
Yeah, good morning, guys. So U.S. Secretary of State Antony Blinken did land in Riyadh a couple of hours ago. In about 45 minutes' time, actually half an hour's time, he will be having a bilateral meeting with the Saudi Foreign Affairs Minister. And then we also expect him to be having a fireside chat with the World Economic Forum President Borja Borenda. That's happening at 12:30 local time. So again, in about an hour and a half's time from now. He is expected to have other discussions with some representatives from key GCC nations, other Arab states too, Turkey as well, also participating. And I thought it was interesting to note that Mahmoud Abbas, who is the leader of the Palestinian Authority, is also here for these talks in Riyadh as well. The backdrop, of course, is discussing the future of Gaza. The main aim is to secure a truce deal between Israel and Hamas to come to some form of agreement on the exchange of hostages, of course, details to be worked out. And then very important from the Palestinian perspective, for the U.S. to exercise some influence on Israel so that they don't go for that attack in Rafah. There's been a lot of talk about that. There has been a lot of talk about that in the last couple of weeks. And the feeling is that it is only the U.S. who can exercise some influence on Israel to stop them going for the Rafah attack at this point. And indeed, that was echoed in Mahmoud Abbas's comments yesterday. And of course, some of the bigger questions remain as to what the future of Gaza looks like and who is going to govern Gaza. But at least the discussions are happening right now on the sidelines of this World Economic Forum.
Well, Jumana, speaking of the States, we know that Antony Blinken is due to Saudi Arabia if he's not there already. What can we expect from that? Is that kind of where that U.S. influence comes in?
That's exactly it. So Secretary of State Blinken did land here a couple of hours ago, as I was just highlighting, and he has all these meetings coming up. And again, I think for many over here, the feeling is that it is only the U.S. that have some sort of leverage with Israel at this point in time. And what you do need to understand is even within the Israeli government, not all ministers are on the same boat. Many, of course, are pushing against as having or coming to some form of a truce deal with Hamas leaders at this point. There are more right-wing members of the government who are strictly against it. So it'll be interesting to see whether any of these details can be confirmed, and also what that exchange of hostages looks like, because that is a key focus for people at this point in time. The public in Israel are calling for it too. So again, unclear what the details are at this point, but some high-level discussions are taking place.
OK, Jumana, thank you very much indeed. Jumana joining us in the World Economic Forum. We'll continue to keep you up to speed with what is coming out of that event in Riyadh. You don't want to miss Jumana's interview with the Saudi Minister of Economy and Planning. That's coming a little later at the World Economic Forum in Riyadh. OK, let's talk about what else we've got coming up. It is a action-packed week. It looks like we've just seen an announcement maybe suggesting that actually the Pedro Sánchez announcement may be brought forward by an hour. I'm not sure what we can read into that in terms of exactly what he is going to be deciding. But remember, we're about to get German CPI data along with that announcement too. We'll be covering that as we work our way throughout the morning. Earnings, we've got a lot of earnings. Maybe not today. The Philips earnings is already having a fairly big impact, but actually I think it's probably not the Philips story that is moving the stock this morning. We'll come back to that in a moment. What have we got? So you've got HSBC, Volkswagen, Amazon. You've got EU inflation tomorrow, Wednesday. You've got UK CPI. You've got, of course, the Fed on Wednesday as well. Thursday, local elections out of the UK. Thursday's a really big day, though. Apple, Novo and Shell all out with numbers. Bank earnings Friday, but, of course, the big event Friday will be out of the United States once again. with that jobs report. We've got some great earnings interviews coming up as well. 3:30 p.m. UK time, we're going to be hearing from the Lamborghini CEO, Stefan Winkelmann. We've got Mike Wirth coming up. He's the Chevron CEO. That's at 8:30 p.m. UK as well. So some great earnings interviews here on Bloomberg. There's a lot of things happened over the last couple of hours. The yen intervention story has been fascinating. Yeah. Philips stock has been on an absolute tear as well. You spoke to the CEO a little bit earlier on. I wonder whether he was anticipating that kind of a move. Let's start with the yen, though. Today was, in some ways, with the benefit of hindsight, a classic day for the BOJ to make its move.
Why?
Light markets.
Oh,
Japanese markets are closed. You
Fair
get
enough.
a much bigger bang for your buck. You come in, you see this move up through 160. The market was front-running the kind of the lack of liquidity. You can push the market around. You can push the levels around. Then the BOJ comes in and batters the yen lower. 155, 156. Now what?
The kind of volatility we haven't seen since they intervened in 2022. We haven't, of course, had official confirmation that this was intervention, but for many it certainly looks like that. 155.54, as you say, a move then higher against the US dollar right now of 1.8%. But when we first came in this morning, it had crashed through 160. That has reversed course as we look ahead to the Fed.
I wonder how the yen traders are probably not having the kind of holiday they anticipated this morning.
Yeah, no days off for them.
I wonder if nobody's kind of, there's a bit of kind of back to the office.
Oh, come on. I feel no sympathy. They knew what they were getting themselves into. If you have that kind of positioning, you know exactly what you're getting yourself into at that point. And Sam Zeef actually mentioned that at the JP Morgan. He said you have to have that appetite if you're going to use this as your funding currency.
The CFTC data Friday showed, I think it was record short positions in the yen. So we were coming into weekend with record short positions, and you've got a Japanese holiday. It's like the perfect little...
It's like Guy's Super Bowl.
It's like, no, it's great ingredients for things to happen. OK, let's talk about Philips.
Yeah,
do you think he saw this pop coming?
They quite possibly a decent-sized move, but this is sizable, right? 30% move higher for this stock because they've managed to put a ring fence around this litigation issue, this claims issue in the US relating to their sleep apnea devices. It's been going on since 2021, and the number is clearly what's standing out. $1.1 billion US is the dollar figure they've gone far below the estimates. So for now, they've ring fenced most of this issue, not all, but a big chunk of them, and that's where the relief is coming from.
It's an amazing rally in the stock there.
Yeah, remarkable. Yeah.
Morgan Stanley basically saying that was significantly less than expected. And that's usually not how things go when it comes to settlements like that.
So what do we got for the rest of the day? We're going to keep an eye on Scotland. We're going to keep an eye on Spain.
Yes, we
Our
are.
Spanish correspondent is going to be all over that story.
So excited. I really want to know. I have so many thoughts. There are implications for this. This is an economy that does not make sense when it comes to the economics. It is outperforming. Despite really high unemployment, inflation not really cracking there. There's a lot to digest. That does it for markets today, though. The Pulse is up next. Stick with us. This is Bloomberg.